Good afternoon, everyone. My name is Amay, and I welcome you all on behalf of MSME and Startup Committee of ICAI. First and foremost, I would like to extend my heartfelt thanks to the committee for organizing such wonderful session on much-needed topics each Friday. It is my privilege to welcome and introduce our esteemed chairman of the committee, C.A. Gyanchand Misra sir. He is a distinguished fellow chartered accountant with more than 27 years of professional experience. He is presently serving as a Central Council member of ICAI for the second consecutive term. He is currently the chairman of the Committee on MSME and Startup, vice chairman of BOS Operations, and Corporate Mitra Committee. He has been actively contributing to the profession through various leadership roles in ICAI. He holds a master's degree in commerce and is also a qualified insolvency professional. Additionally, he is an associate member of ICSI and a law graduate. Known for his expertise in audit, company law, insolvency, professional ethics, Sir has inspired professionals and students across the country through his insightful lectures and visionary leadership. We are truly honored to have you with us today, sir. Now I would request Chairman Sir to kindly say a few words of wisdom. Over to you, sir.
So thank you so much, Amay, for such a generous introduction of mine. So very respected speaker of today's program, Shubham Goyal ji, and of course moderator C.A. Amay ji, and all of his team, all respected participants who are viewing this very important webinar that has been hosted by MSME and Startup Committee. And this is the 93rd webinar MSME Pathshala today we are organizing. And the very important topic we are going to discuss today is Startup India, Opportunities for Chartered Accountants. And of course, friends, to be deliberated by very renowned speaker, Shubham Goyal ji, who is not only a chartered accountant, but he is expert in various other areas also. And he is RV, I think, also. So his expert opinion on various aspects of the Startup India and opportunity for chartered accountant will be, discussed by all of us. Friends, we understand that the country, our country, especially India, is one of the fast-growing economy of the world, and the role of the startups is truly immense. In the country, we see after the regime of the present government, so many startups have come up, and not only the startups have come up, they are getting priority in the funding also, and so many venture capitalists, so many private equities are there. They are putting money, huge money in the startups. And the time has come when we people as a chartered accountant should be well versed and aware about the various formalities, compliances that the startups need to do, not only in order to get the funding, but in order to run the business as well. That's why the time is for the chartered accountants to take the lead in various areas by which they could give the startups the newer and novel directions for their better future. Friends, three important aspects which is need of the hour to discuss with respect to the startup. Number one is the finance. Finance certainly is blood for any organization. If there is finance, the organization certainly runs in a smoother and better way. And not a smoother and better way, rather I will say that sometimes the finance is much important for the day-to-day operations also. That's why working capital management is another area which needs to be attention. So to arrange the funds is probably the first aspect which the chartered accountants can take as an opportunity for the startups. The second area is with respect to the compliances and hand-holding. So startups, they people are not generally so much equipped with the accountancy and compliances, GST, income tax, all those areas. So we chartered accountants, since are well versed with all such compliances function, so chartered accountants can take the opportunity with respect to the compliances and hand-holding of the startups at large. The third area, that is with respect to the hand-holding process for the various schemes of the central government, various funding schemes, various subsidy and grant schemes, registration with DPIIT, and so on. So I'll say the regulatory part with the government and funding thereof, grant, subsidy, all these areas are another area which the chartered accountants can understand better to practice with. Arranging the capital, we understand that this is always one of the very lucrative field for the chartered accountants, and they are practicing well in this area. But now the time has come that how we could restructure the things, how we could support the startups in very specified and very precise manner. Otherwise, in general way, if we see the chartered accountants, I am very happy to share, I think that across the country, if funding is seen, most of the chartered accountants are involved in the funding and they are doing it in a better way. So today's session is with respect to the opportunities for chartered accountants under startup and to be deliberated. And of course, we have our certificate course also for MSMEs and startups separately. So we'll request the members who are listening to me to kindly register and enroll yourself for the startup and MSME courses, which we are going to have virtually also. So to have understanding of one segment which is contributing to the economy, GDP about 40%, that is also need of the hour. That is the MSME and startup. So I'll request each one of you to kindly be the resource person, kindly be the part of the committee. And if you are not part, please join the course, understand the ecosystem, and serve to the MSME and the startup, which are becoming the backbone of the economic growth of the country. And by 2047, when the government is looking that the country becomes a developed country, I think the role of the MSME and startup would be immense by that time in next 20 years. And of course, the role of the chartered accountants will be immense in making them successful business leaders by 2047. So without taking much time, I am really thankful to the speaker, to the moderator, and every participant who have attended this program. And please keep connected to the committee. We are going to have 2 days, very important program in Mumbai, 26th and 27th of June on startup and MSME, which is to be inaugurated by Honorable Cabinet Minister and 3-4 more cabinet and ministers, and local startups and MSMEs shall be participating over there. We are expecting footfall of about 5,000 people in these 2 days in Reliance Jio Center on 26th and 27th June 2026. We'll request kindly register for the same. And the last thing that I would like to bring to the notice of all the participants, that on 27th June, across the country, the committee is celebrating the MSME Day. 27th June is International MSME Day. So last year, we had handholding of about 20,000 MSMEs across the country in a single day. This year, we have targeted to handhold 1 lakh MSME in a single day. So request to all the participants would be kindly connected to your nearest branch, nearest CP study chapter, nearest regional council, and contribute in the ecosystem of the MSME and large. So thank you, organizing team. I am really thankful to each one of you for patient listening. So over to moderator.
Thank you so much, sir. Now it gives me immense pleasure to introduce our learned speaker, C.S. Subham Goyal, sir. He is a fellow chartered accountant, registered valuer, and Ind AS certified professional. He has made remarkable contributions in the area of startup consultancy and valuation services. He has guided more than 100 startups in availing benefits under the Startup India scheme and has trained around 10,000 students and professionals through various seminars, orientation programs, and professional sessions across ICAI branches. With his rich practical exposure, we are confident today that today's session on the topic Startup India Scheme Opportunity for CAs will be highly insightful and enriching for all of us. On behalf of everyone present here, I extend a very warm welcome to both our respected chairman and our esteemed speaker. Just an information for the participants that you can send your queries and we will take up the same at the end of the session. Now I will request Subhamji to kindly take over. Over to you, sir.
Thank you very much, Ameji. First of all, I would like to thank ICI MSME Committee, Gyanchand Mishra sir, and of course our moderator Ameji to guide us through the session and providing me this wonderful opportunity. So before starting our session, I would just like to know the grasp of this technical format. So what is, I am just confirming this. So this will be one-way communication. Na? The student or members will be sending the queries throughout the session. We will be taking it at the end of the session. So
Yes,
as
sir,
of
yes,
now,
sir.
I need to just keep it one way. We will taking the queries later. Na?
Yes, sir. Yes, sir.
Okay. Thank you very much. So now let me start the session. Let me share my screen. So is my screen visible to all?
Yes, sir. Yes, visible.
Okay, great. Thank you very much. So let us start our today's session, that is Startup India Professional Opportunity for CA. So before discussing about startup, let us discuss what we will gonna cover in the today's 1.5 hour or 2 hour session. First of all, we'll discuss about Indian economy. Then we'll look around DPIIT registration throughout the different years. Then we'll get to know about the Startup India scheme, that is the DPIIT recognition itself. What are the eligibility criteria for the same, benefits of DPIIT recognition, document required for DPIIT registration, etc. Then thereafter, we'll discuss about the income tax exemption benefit available to the DPIIT recognized startup. Thereafter, we'll discuss about the Startup India Seed Fund scheme, and then angel tax exemption, and thereafter the startup funding. So before starting our topic, let us first of all discuss about the future of profession. So as of now, we know that in India there are approximately 5 lakh plus professionals. So out of these 5 lakh professionals, approximately 35% professionals are practicing and remaining 65% are doing job. And as far as Indian economy is concerned, we know that Indian economy is roughly around $4.15 trillion as of 2025-2026 financial year, which roughly translate into 360 lakh crore rupees. So what is happening through the last 10 years is, so as we know that the GST audit which were done by earlier by CAs has now been made voluntary. So right now what is happening is the transition period has started. Earlier there were a lot of compliances. Now the government is making compliancing easier year after year. So after 4-5 years, what our CA practice gonna look like is, it is just my estimation. There is no ICI sources behind this. So what is my estimation is, after 3-4 years or around, we can say around 2031 or so. So there will be only one audit that will cover tax audit, stat audit, GST, etc. Already GST audit has been removed. So, and this audit limit might also increase to 20 crore or 50 crore or so. So we gonna see this reality in the upcoming future. As of now, there is already exemption of tax audit for companies having turnover less than 10 crore and doing 95% of transaction via digital modes. And there is also a discussion going around that the stat audit should be removed for the companies having turnover less than 1 crore. So sooner or later, this is going to happen. There will be only one single audit and there will be a monetary limit for the same. So why I am discussing this is because sooner or later, our profession is slowly moving from compliances to contribution. So we have seen the power of signing has gone down. And right now, what we need is we need to shift our practice from compliances portion to the contribution portion. So for that, we'll discussing about the today session. One opportunity, that is the Startup India scheme. So first of all, let us discuss what is the current status of Indian economy. As I have mentioned earlier, that Indian economy is approximately $4.15 trillion as of 2026. And when we discuss Indian economy in terms of purchasing power parity, anyone who know what is purchasing power parity is? So simply, let us take an example. For example, MACD. MACD has its stores in different countries of the world. For example, a MACD burger in India has a price of around 49 rupees or say 50 rupees. The same MACD burger might have a price of $5 in America. So what is happening here is 50 rupees of Indian MACD burger, which is costing 50 rupees, is somehow equal to $5 of MACD burger, which is we are getting in America. So when we take the purchasing power parity, so we adjust all the price differential of different items. So as per the purchasing power parity, Indian economy is 18.9 trillion, that is approximately $19 trillion. So what I am simply trying to say here is India is sixth largest in terms of nominal GDP, but we are third largest in terms of purchasing power parity. Also, we are third largest startup ecosystem of the world. So India is growing, and we already know that we are the fastest growing major economy of the world. So what is that? What will be its implication? So let us discuss about the future of our country. So what going to happen is today we are at 2026. Okay. So last year GDP was somewhere around 360 lakh crore rupees, and in this year our GDP will be approximately 400 lakh crore rupees. Okay. So do we know the growth rate at which we are growing? So growth rate at which we are growing is approximately 6.5%, 7% or so. And there is one more element here is that is inflation. And our inflation is generally in the range of 4 to 5%. So when we hear in the news that Indian economy grows about 7.5%, 8% or 6%, 6.5%, so they are generally talking about the real GDP growth. And when we add inflation into it, it converts into the nominal GDP growth. So let us take, for example, 6.5% for the real GDP growth and 4.5% is our inflation. So that is roughly around 11% of nominal GDP growth. So what will happen is, let us take where will be our country at 2047. Let us understand where we will be at 2047. So as of now, we are at 400 lakh crore. So at 11% nominal growth rate, there is a rule of 72 that says 72 divided by interest rate is equal to the number of year in which a country economy is gonna double or amount is gonna double. So as of now, we could say that after 6.5 years, our GDP will double itself. So let us take, we are approximately 400 lakh crore in 2026. So after 6.5 year is 6.5 is 32.5. So somewhere around 2032 mid, we will be approximately around 800 lakh crore rupees. And after that, around adding another 6.5 years, 2039 approximate, we will be approximately 1600 lakh crore. And after another 6.5 year, for example, let us say 2046, we will be approximately 3200 lakh crore. And after 1 year, that is 2047, we will be approximately 3500 lakh crore rupees. So what we could understand is currently when we compare this 3500 lakh crore with 360 lakh crore, as of now, even after approximately 78, 79 years of independence, our GDP has grown only by, our GDP is only, we can say, 360 lakh crore. But within next 21, 22 years, our GDP will be 3500 lakh crore. So what I am saying is, yes, we are already the fastest growing economy of the world, but the growth which we gonna see in the upcoming 25, 30 years will be massive. It will be doubling, Indian economy will be doubling itself within a period of 7 years, approximately 6.5 years, 7 years, 7.5 years or so. So definitely there is a lot of opportunity for Startup India. So now let us discuss about the Startup India scheme. First of all, let us understand what is a startup. So before going through the PPT, let us understand it here. So first of all, what is startup is? As per Startup India scheme, any entity which is an entity, there are basically 3 types of entity provided under Startup India scheme: partnership firm, LLP, and companies, private limited, and company. Partnership firm, LLP, and private limited company. If any business has a entity structure of partnership firm, LLP, or private limited, and they are doing a innovation, in case they are not doing innovation or improvement of existing business, innovation or improvement, then they will become a startup. So as of now, we could say that any business which has an innovation element in it or a improvement of existing business in it, it will become a startup. Now the question arises, for example, a person started solo, he started in sole proprietorship, then whether that entity could become a startup. So the right answer is yes, that entity could become a startup, but they need to convert themselves from sole proprietorship to partnership firm. So in order to become a startup, you have to start your business as a private limited, LLP, or partnership firm, or you have to convert yourself into private limited, partnership firm, or LLP. Now let us understand in detail what is this concept of innovation or improvement of existing businesses. So in order to understand this concept, let us divide the total businesses in 3 parts. Number 1 is trading business. Number 2 is manufacturing business. And number 3 is services business. So let us discuss first of all manufacturing business. So for example, there is a client and who has a manufacturing setup. If any of our client dealing in any industry, and we could prove or we could say that any of his goods, in case he is doing manufacturing, then definitely he is dealing in goods, has some of the business improvement, let us say about the process, his manufacturing process has some business improvement, or we can say his final product has some of the improvement from the existing product, or we could say about any technological usage or any technological usage is being made by him, which improves the efficiency of the product or which saves the wastage, etc. of the product. So anything which improves the business from the existing business, any point if you could figure out which could say or which could prove that there is an improvement in your business model from the existing business, I would say around more than 80% manufacturing businesses which are starting currently. We'll discuss about the eligibility criteria in detail, but right now we are discussing innovation or improvement of existing. So the current manufacturing process already has something new. We just need to figure out what are the newness, what are the innovation, or what are the improvement in your business with relation to the old process. So 80% of the manufacturing businesses, I could say, has some of the element of innovation or improvement. Now let us discuss about the services. So in case a person is dealing in service business, so let us take some example. For example, a person dealing in IT industry, definitely his business could be innovative. So because IT is innovative in itself, or some person is providing any consultancy, his business could be innovative. So I am simply saying unless until he is a CEO doctor, because there is a simple professionalism for those services and we could not advertise ourselves, and the CA or doctor services or advocate services would not come under the startup scheme. But other than the professional services, any service, it is very easy to prove or very easy to make an innovative business model. So I would say more than 90% of the cases, other than the professional cases, the services sector, we could easily prove that the business has the innovation or improvement of existing. Now let us discuss about the trading. Now what happen in trading is, for example, a person open a shop of clothes or a shop of FMCG product, Karyana store. Generally, there is very few chance, very less chance of any innovation in a traditional Karyana store or traditional clothes store. So unless until there is a mixture of trading plus service. For example, you are launching a product and you are launching it online and you are spreading it through different parts of the country. So there will be some of the element of the online business or some of the service sectors also there. Simple trading business could not be a startup only by itself. But if we add the employment generation into it, if we add the service element into it, there is a probability that your business could become a startup. So simply what we have figured out till now is manufacturing, in case there is a manufacturing factory, manufacturing client, 80% of the cases you need to figure out what are the new things you are doing, what are the innovation in your business, what are the improvement in your business, and it will easily become a startup. Services business most of the time will also have some of the innovative element in it. But simple trading business, there could not be any startup, because simple trading, purchasing goods from one person and selling to the different customers, does not involve any innovation or improvement of existing business. But in case we are planning to launching our trading business throughout the country, for example, we are planning to launch a food chain or any other business or any other online selling business where we will be creating large scale employment generation. Whenever there is large scale employment generation, we could apply Startup India scheme on the basis of large scale employment also. So this is we have discussed till now. Now let us discuss about the eligibility criteria for the startup. So first of all, as we have already discussed, the startup should be a private limited partnership firm or LLP. Other than that, private limited partnership firm or LLP. Any other incorporation structure other than that will not become a startup. Our turnover. Actually, the turnover limit was 100 crore up to last year budget. In this current year budget, the government has increased this turnover limit from 100 crore to 200 crore. Yes. The current turnover limit for applying a startup has increased to 200 crore rupees. When the scheme was launched in 2016. So at that point of time, 100 crore was a massive figure. But now 10 years onward, we could say the inflation adjusted 100 crores have now become 200 crores. So government has revised the recognition amount. Next is, so any business having turnover of less than 200 crore would apply for a startup recognition. Once you achieve the turnover of 200 crore, then you will lose the startup recognition. Next question is, entity can be considered as startup up to 10 years from the date of its incorporation. Now the question arises, we have already taken example of a proprietorship firm converting into private limited. So for example, a proprietorship firm was incorporated in April 24. It was a proprietor, and it has converted into company in May 26. It has converted into private limited. Now the question arises, 10-year timeline will be seen from where? Whether 10-year will be counting from April 24 or 10-year will be counting from May 26. The answer of this question is the date of incorporation of first entity. And our first entity is proprietorship, that is April 24. In this case, April 24 will be our date of incorporation. Next is, startup should be working about innovation or improvement of existing product, services and processes. So product or service or processes. And the point here is, and startup should have the potential to generate employment or create. One more thing we need to figure out is, we need to note that is, an entity should not be formed by splitting off of existing business. Any entity which is formed by splitting up or reconstitution of existing business shall not be considered as a startup. So in our case, when we change the structure of our company from proprietorship to private limited, changing the structure of company will not debar ourselves for applying for Startup India. But for example, there was an existing business and it converted its structure or it converted its business model. Any existing business, any old business who want to start a new business should incorporate into a newer entity rather than splitting up of an existing entity or reconstitution of an existing entity. Next is benefit of DPIIT recognition. Now we have understand that Startup India scheme eligibility. Now let us understand why anyone should take the DPIIT recognition. Obviously, okay, we are eligible, but we are eligible for many other things. Why should I take it? So the major point of taking Startup India benefit is the 3 years income tax exemption available. Yes, your entire profit out of the first 10 years. Obviously, a business will be eligible for startup only up to 10 years. Any 3 consecutive financial years. For any 3 consecutive years, the income tax on the profit will be nil. So this is the main benefit of the DPIIT recognition. So we become eligible for applying for income tax exemption under 80 IAC section of Startup India scheme. So this is the main benefit, and there are some other benefit like self-certification. Whenever any person need to set up a plant, there are different environmental laws or different labor laws which he need to fulfill, or which for whom application needs to be filled. So earlier it used to be very cumbersome process for the businesses to follow all these rules and regulations. Now, under Startup India scheme, if you have applied for Startup India and get recognized, you will get self-certification. certification is here means you will form the you will fill the form so moto and you will be deemed to be complied with the different 3 labor laws and 3 environmental and 6 labor laws. Next point is patent application. So generally, whenever someone is applying for a patent, trademark, etc., so there is a huge time limit for the same. And in case of startup, if a business is startup recognized and he is applying for startup, there will be fast tracking of the patent application in case of a startup entity. And one more thing, they will be getting 80% rebate. For example, any patent application is having 1 lakh rupees fees. They need to pay only 20,000 rupees. 80% rebate they will be getting. Next point is some of the business we know are based of tender. For example, they need to provide their services to government and through the tender notification, there are different conditions like your business should have a previous 3 years turnover of this much. Your production capacity should be 3,000 metric ton. You should have this, you should have that. And it becomes very difficult for a newly incorporated entity to fulfill those conditions because they only have a 6 month experience and the conditions are like you should be having 3 years experience, your turnover should be this much and that much. So it was becoming very difficult for a newly incorporated company to get tenders. And in order to make this process easier, under Startup India scheme, the EMD companies are exempted from submitting EMD and exempted from prior experience or turnover in all central government ministries and departments and even under different state government schemes also. So what I am saying is if your business is a tender based business and your business is depending upon whether you will be getting the tender or not and you are generally ineligible to submit the tender, if you get the simply the startup recognition or DPIT recognition, you could easily apply for the tender and you will be exempted from EMD. You will be exempted from the prior experience. You will be exempted from the turnover and different conditions. So what we need to do in order to check whether our company is getting the benefit, if your any client has a tender-based business, just read their tender notification. In their tender notification, if there is a line written that if your business is DPIT recognized or startup recognized, then there are different benefits available to you. You need to guide your client that sir or ma'am, we need to apply for the DPIT recognition. We will be able to fulfill the tender conditions. Okay. So next is easy winding up of the company. We already know under IBC, company would be wound up within 180 plus 90, approximately 270 days. For maximum, currently it is taking about 1 year or so. Earlier, it might take up to 15-20 years to wound up a company, a large company I'm talking about. But now under IBC, initially when the IBC was launched under 2026, the 15-20 years had been reduced to 2-3 years because India is a large country and there are different regulations going through. Some state order were put into IBC, but slowly but surely, we have reduced that time limit to approximately 1 year now. And in the years moving forward, we will definitely gonna cut that time limit of resolving a business from 1 year to approximately 6 months. So definitely this is gonna happen, and it will be an easy exit in case your business is suffering losses. It's okay. Earlier, what used to be the case now is, for example, you have 10 crore rupees and you have invested it in a business, and you were thinking that I will be making my 10 crore to 20 crore, 30 crore, or 40 crore. But the market changed itself. There were different regulation or the technology expired, and your 10 crore business has now taken a loss of 2 crore rupees, and now you are left with 8 crore rupees. Now a logical person will wind up the business and take the 8 crore rupees and invest it into some other business. But earlier it was a very huge challenge. But because of the IBC, this could be easily done. Although you might be thinking that this is a benefit available to all the company, not only the startup recognized company. Yes, you are correct here, but we are discussing the specific point for a DPIT recognized startup. And yes, this is something which is available to even non-DPIT recognized startup if you are a company. Next point is funding scope. We are going to discuss about the funding, different model of funding, what are the different funding opportunities under Startup India scheme. Document required for DPIT recognition. Simple, basic documents. Your basic documents about your company, incorporation structure or registration certificate, PAN, mobile number, email ID, director's basic profile about the director, their education qualification, name, address, mobile number, PAN, Aadhaar, business plan or pitch deck, basic profile of the business, official website, and authorized signatory agreement whereby their company is being stating, company has been authorizing a director to apply for Startup India on the behalf of the company. Simple template is there, and you just need to take it a print and fill it out and sign it. So simple, basic and authorized signatory agreement. Thereafter, you need to fill the form whereby you need to provide the company profile, the problem statement the business is solving, the solution to the above problem business has proposed or is doing, business plan and the future growth, future earning model, etc., etc. So generally, these are the we could say basic details about the company, how the company is gonna perform in the future. And in case you have any patent and trademark, optional. Article of association is also optional to attach, any non-disclosure agreement or a shareholder agreement. These are the simple basic document required for the DPIT recognition. Now let us discuss about the income tax exemption. So we know the 80 IAC exemption available to the startup is for first it's not first, for 3 consecutive financial years. 3 consecutive financial. For example, your business was incorporated in 24. Let us say May 24. So you could take the benefit up to May 34. And currently it is May 26. And first year in which you take the benefit is 27-28. So once you have taken the benefit of income tax exemption, you need to take the benefit for 2 more years consecutive, from 28, 29 and 29, 30 years. So you could not segregate these years, because once you have taken, you have to take the benefit for continuous 3 years. What is the eligibility criteria for the same? So eligibility criteria is your startup should be DPIT recognized. Company should be incorporated as private limited or LLP. We need to note down here, there is no partnership firm here. Partnership firms could get themselves DPIT recognized, could get Startup India benefit, but they will not get the income tax exemption benefit. Why might be the reason? We could say that the private limited company or LLP, MCA are looking to them and they are following strict rules and regulation. So generally, this might be the reason behind that. And next point is business should be incorporated after 1st April 2016, but before 31st March 2030. As of now, government has said that any business who incorporate itself up to 31st March 2030 will provide them the Startup India benefit. Turnover, similarly, earlier the turnover limit was 200, now it has increased to earlier was 100, now it has increased to 200. And time limit is simply 10 years from the date of incorporation. And simple basic point is startup should be working toward innovation or improvement of existing products, services, or processes, and should have the potential to generate employment or create wealth. And the business should not be formed by splitting up or reconstitution of the existing. So we all knew this point. There is similar to the DPIT recognition. Just one thing we need to note down is the business should be, we need, first of all, we need to incorporate a entity. For example, you need to create a private limited company. Thereafter, you need to get the company DPIT recognized or startup recognition, startup India scheme, recognition under startup India scheme. Then once you have get yourself DPIT recognized, then you need to apply for income tax exemptions separately. Am I clear? So this is simple conditions for applying for DPIT recognition and ATIS. This year, under in 2026 budget, what the government has done is, the problem was India is doing okay, we are growing, but the challenging we are facing is we are good at coping other, but we are not good at doing R&D, doing innovative stuff. So what was the need of the hour? There was a need of the hour to do some research, to do some deep research. So generally what happens is, whenever a company is doing some deep research, the majority of the time, majority initial 7, 8 years, 9, 10 years might get exhaust in the research period itself. So what was happening earlier is, the 10 years limit of Startup India was proving insufficient for them, because what was happening is they were taking 5 to 6 years for research, and once they start their operations, and they barely touch the break-even point up to 10 years. So they were not practically getting the benefit of ATIAC exemption, and there were no motivation for them for applying for Startup India. So government recognized this point, and what government has done is, so they have provided that the deep research company could get the Startup India benefit up to, sorry, no, not 15 years, up to 20 years from the date of incorporation. And they have the increased turnover limit. And for deep research company, and how could we identify that a company is a deep research company? We need to see the MOA of the company, the business invoices of the company, the expenses of the company. As once you get the ATIC exemption, the company need to file Form 10 CCD, Form 10 CCB, in order to get the practical exemption, in order to get the practical benefit of zero tax. So auditor need to certify the company is deep research company. Then only they will get the benefit of 20 years from incorporation and turnover of 300 crore for deep research company. So as of now, we have discussed who could become a startup, private limited, partnership firm, and LLP. But when we are talking about income tax exemption, only private limited and LLP could be apply for the same. No partnership firm in income tax exemption. Turnover limit earlier 100 crore, now 200 crore. For deep research, 300 crore. And time period till when we could apply for Startup India, for general company 10 years, and for deep research company 20. Documents required for ATIAC exemption. Number 1 is MOA of the company, board resolution optional, past 3 years balance sheet and profit and loss, ITR acknowledgement of past years. Now some person might be thinking, sir, our company is only 6 months old or 1 year old. In that case, up to available. In case your company only have 1 year data, you need to provide only 1 year. In case company hasn't prepared a balance sheet because you have just incorporated, then you don't need to provide any of these. Then thereafter, you need to create a video of the company about 2 to 3 minutes, showing the working of product or prototype, proof of concept, in which you will be explaining how the business model works. So a video of working physical audio video format needs to be provided. This is the main catch point while applying for the income tax exemption. You need to have a professional videographer with you. You need to have I could say, a creative video about your business model, and then the pitch deck of the company, brief profile of the promoters, business model, and problem statement, etc. These are the general documents required for income tax exemption. And the time limit, we could say that once you apply for the DPIT recognition, generally it becomes instantly. Within a minute or two, actually the government is using AI enabled solution for checking your form, and you will instantly get the DPIT recognition. But for 80 ISC, practical time limit it is generally taking now is 3 to 4 months. So what will happen is you will get some additional document required or an deficiency within 1 to 2 minutes, and then you will complete that deficiency within 15-20 days, and then it will take another 1 to 2 months to get the approval. So approximate time for applying for income tax exemption is 3 to 4 months. Now one more question is arising. For example, a company has been incorporated into May 24, and company expect to become profitable from May 29, and currently we are at May 26. So company is thinking that I have time up to 2034 get the benefit, and I will become profitable from May 29 only. The question is, should the company apply for ATIS exemption only after May 29, or could it do earlier also? So answer is, we could apply for 80 IAC whenever we want, and we could take the exemption, and what we will get is we will get the certificate of eligibility from the DPIIT department. This certificate we are going to get from DPIIT department, not from the income tax department. And as far as income tax department is concerned, once we have got the certificate, for example, first year for which you are applying is 2930. So before filing the return of the company, you need to fill a form named 10 CCB. Form 10 CCB need to be filled by the company, which is audited by the chartered accountant, audited by the statutory auditor or any other auditor of the company, who will certify that the company has not inflated or deflated its profit, the books of accounts are in compliance with the relevant taxation laws and accounting standard of the company, of the country, and etc. etc. So this is the procedure for getting the income tax exemption. So I would strongly encourage all the professionals to get their clients the benefit of income tax exemption, because once you have certificate, the whole process generally takes 3-4 months. Sometimes what happens is a client takes too much time giving the documents, and you are also busy. You might not be able to process the documents within 1 or 2 days. You might also take 5 to 10 days of time, and client may also provide you details within 1 to 2 months. So practically this 3 to 4 months period is the time taken by department. Once we add in it the time we take collecting the documents and time we take submitting the form, it may become 6 to 7 months or so. So it is a lengthy process, cumbersome process. So I would suggest to take the income tax exemption benefit as soon as possible. And whenever you feel the need, whenever there is a profit and you think now it is the right time for us to claim the benefit, simply fill the 10 CCB form audited by a chartered accountant. Now, let us move forward and discuss the Startup India Seed Fund Scheme. First of all, eligibility. Who are eligible for the Startup India Seed Fund Scheme? So basically, DPIIT recognized startup. We have already understand what is the conditions for DPIIT recognized startup, partnership firm, LLP or private limited. any TPOIT in your startup, incorporated not more than 2 years at the time of application. So what is happening here is you need to apply for seed fund scheme within 2 years from your date of application. So your date of incorporation is, for example, May 24, and now is May 26. In that case, your 2 years has already lapsed. You will not be eligible for apply for seed funds. Why the limit of 2 years when the total limit is 10 years? Simply because generally, when is the seed fund required? When is the money required? Initially to run the business, seed is simply like planting a seed in the mud to grow a tree, and seed is the first thing you plant. So that is why government has said that if you apply within 2 years, then we will consider you are genuine. Because otherwise, you must have either closed your business or you must have figured out how to get your money. Next is you should have a business idea fit for commercialization and scope for scaling. Generally, every idea have a scope of scaling and market fit. Generally, this is the easiest condition to fulfill. The major point which we need to understand here is the startup should be using technology. So the startup should be using technology in its core product or services or business model or distribution channel or methodology to solve the problem with time. So your business model should be IT enabled business model. You could make it AI enabled also, but an element of IT should be there. In case your business doesn't have any element of technology, then you are not eligible for Startup India seed funds. There are some preference sectors, but these are only preference. You could apply even if you are not in these preference sectors. Next is, in case you have taken monetary support of more than 10 lakh rupees from any other central or state government, then what will happen is then you become ineligible for the Startup India seed funds. So shareholding by an Indian promoter should be at least 51% at the time of application of the incubator. So these are the basic criteria for seed fund scheme. The one point you need to understand is, number one is your business should be only 2 years old. From the date of incorporation, your business should be only 2 years old. And next point is there should be an IT based system, IT based your business model, your product or distribution or anything else should be there in order to become eligible for the Startup India seed fund scheme. Types of funds received is, number one is grant, number two is loan. Basically, government could provide you grant of up to 20 lakh rupees for validation of proof of concept, prototype development, product trial, simply pre-revenue stage. Once you have starting generating revenue, because proof of concept, prototype development, and product trials, all these stages comes before revenue generation. So even if you have generated revenue, let us say 1 lakh rupees, a few lakhs rupees, then you will become ineligible for the Startup India seed funds. So government is simply saying we are growing a seed. If you have started generating revenue, then you have figured out a method to run your business, then you don't need our help. So that is why government is giving only pre-revenue businesses the grant. And one more thing, the entire amount of 20 lakh will not be provided to you in one go. It will be a milestone based installment. So you need to mention that how you gonna utilize this 20 lakh and at what time period. For example, you apply for this in May 26 and your application get approved in June 26. Okay. And you have mentioned that we need 8 lakh rupees in July. In September, we will be requiring 4 lakh rupees and 5 lakh rupees thereafter, and so on and so. So you will be getting these 20 lakh in milestone based. So you will get first installment, and then you need to provide them the proof that how you have utilized the same, and then thereafter you get second installment, third installment, and so on. You may divide installment might be 2, 3, or 4 depending upon the fact of the case. Next is one thing is either you could apply for a grant, or if you say 20 lakh is I need more money, you could also apply for a loan. And loan could be provided in 3 forms. Number 1, debt. Interest rate will be RBI base rate minus 0.5%. Currently, I think RBI base rate is something around 5.75 or 6. But let us assume RBI base rate is 6% or so. Then you will get interest rate of only 5.5% for the 50 lakh loan. Next is convertible debenture. If you don't want to pay the amount and you want that I will pay the 5.5 interest for 2-3 years, then I want the 50 lakh to be converted into equity, you could also issue the convertible debenture. Another is debt link instrument, or a mixture of both, derivative option, an option to the investor or option to the fund providing organization. So there are basically 3 types: debt, convertible debenture, or debt link instrument. In case you are taking a loan, maximum tenure will be 5 years, and moratorium simply, so you don't have to pay the installment, pay the principal. Up to 12 months, you need to pay only interest. And after 12 months, you have to pay back interest and principal as well in the form of EMI. Unguaranteed. No guarantee required, no security required. So this amount you will be getting is simply without any guarantee or without any security. So this is the process. Now, how could we apply for the Startup India Seed Fund scheme is, first, we need to fill the form online. Just give me a minute. Let me change the color of the marker. So first, let me take just a minute. So we need to fill the form on the Startup India Seed Fund website, and thereby there will be 3 incubators which we should select. Now let us understand what are the incubators. So basically, there is a DPIIT department which comes under MCA. So DPIIT department comes under MCA, and DPIIT department have created expert advisory committee which have government representative and industry experts, and expert advisory committee will be assisting to incubators. So who could become an incubator? Anyone or any organization could become an incubator, or basic purpose of incubator is assist. So basically, generally, who start incubator is NGO start incubators, educational institution or colleges, etc. start incubators. Atal Innovation Mission, you have already have heard. There are Atal Incubation Lab as well. So there are different incubators in India. And in order to enroll yourself on Startup India Seed Fund scheme, there are certain guidelines you need to follow. For example, you should have 500 square meter of area. You should have seating capacity of 15 plus person. IT system should be updated, etc. Minimum investment is 25 lakhs or 50 lakhs, etc., etc. So, and from incubators, the money will be given to the startups. So the flow is going from MCA to DPIIT to expert advisory committee to incubators and from there from start. So incubators are also industry specific. For example, you deal in agriculture based business. So there may be some incubator which only deal in agriculture. You deal in edtech platform. There may be some incubators which deal in edtech, or there might be some incubator who are general in nature, who might provide services to uh, area specific, location specific, or few of the industries combined. So first of all, throughout the list of incubators available, as of now, there are approximately 75 incubators. It keeps on changing. Some incubators are getting added and some are getting removed also. So the list keeps changing. So there are 75 listed incubators throughout India on the Startup India Seed Fund Scheme portal. So out of these 75 incubators, we need to figure out only 3 incubators, which would be best for us, which should be close to our business location. And number 2 point is they should be dealing in the nature of industry in which we are doing our business. Now, what will happen is we select 3 incubators, and we fill our form. And based on form, the incubator will check the application and approve our presentation. So this may happen is we have applied for the funding to 3 incubators. It may happen is none of the incubator approve application. Only one of the incubator approve our application, or 2 or 3 incubators, all the incubator approve our application. In case none of the incubator approve our application, then simply our procedure, our Startup India Seed Fund application is rejected and the procedure ends now. But if in case we get selected, we need to provide the presentation to them. In case we get selected in more than one incubator, we need to provide the presentation to more than one. In case we are getting selected in 2 or 3 incubators, we will be providing the presentation into all of them. And then they will be approving our application. Generally, we get the approval only from one incubator, but in case we are getting approval from more than one, then we could decide which incubator is providing a good terms and condition, or in case they are both are providing similar, then we could take any one of these incubator. So, and then the disbursement will happen in the stage-based process. So this was a whole Startup India Seed Fund Scheme procedure. Practically, in genuine cases, there is 40 to 50% probability of getting the Startup India Seed Fund Scheme in genuine cases, I am saying. Now, let us move forward and discuss about the angel tax exemption for startup. Before coming to our PPT slide for angel tax discussion, let us do something on our note. Yeah, just give me a second. So first of all, before understanding the concept of angel taxation, we need to understand the concept of valuation, the concept of fair value. And one more thing, let me clear you. Angel taxation has been abolished by government in 2025 budget, in a 2024 budget. So it has been abolished since financial year 24-25. Yes. So under 2024 budget, starting from assessment year 25-26, the angel tax assumption has been removed. But we need to get the gist of it in order to understand what was the angel taxation, what is valuation, what is fair market. So for example, let us take an example. A company having a paid up value of its share is 10 rupees. 10 rupees per share paid up value, and they get a funding. And they are getting a funding at a issue price of, for example, 500 rupees per share. An investor is putting the money into 500 rupees per share. Now, what will happen is as per Companies Act and as per Income Tax Act, the company needs to get a certificate of fair market value of the share. So there will be basically two scenarios. If the fair market value is 500 or more than that, then there will be no taxation. The company has issued only the fair market value price. So earlier also there was zero tax. And for example, the fair market value comes out to be 450 rupees per share. In that case, the rules of the government said that we will assume that the 50 rupees per share is your income and we will take the tax under 56 to 7B. So this used to be the challenge of the startups earlier. So what we will do is we apply for DPIIT recognition, and there was a provision if your business is startup recognized or DPIIT recognized, then you will get the income tax exemption, simply the angel tax exemption under this also, and your 50 rupees will not be counted as income and only zero will be counted as your income. This was the earlier rule. Now what has happened recently is the government has abolished the concept of taking the tax off on this underpricing, on this overpricing, I would say, or issuing the share at more than the fair market value. Now the government is not taking tax, then obviously the concept of annual taxation has already been abolished. So I just wanted to tell you about what is the valuation in this case. So simply the provision has been seized, but we should be aware about this because generally the client does not know all the technicalities, and we should be closely aware. When a closely held company issues share to the resident person at a price which is more than its fair market value, extra consideration is taxed under 56 to 7. This was the legal provision up to 31st March 24. But after that, this provision has been abolished from the 2024 budget. So I think you all are very much aware about the Startup India income tax exemption. Now let us discuss about, before taking the question answer. So let us discuss around 10 or 15 minutes or so about the funding process. So what I was saying earlier is, we know our profession is transitioning from the compliance to contribution, and the startup is one of the similar opportunity. So till now we have discussed that how to get the different types of benefit to our startup under Startup India scheme, and this is only one Startup India scheme. Now let us discuss about other things also. So for example, let us take an example, because we should be well aware about all the provision whenever we are doing a lean startup. Till now we have discussed only about Startup India scheme, and for that if we don't take the deep research company, turnover limit is 200 crore. And one more set of schemes I would say are there is MSME schemes. And even under MSME, there are some central government scheme and there are some state specific schemes. You might be sitting in Maharashtra, you might be sitting in Delhi, you might be sitting in UP, Haryana, Punjab, or any other part of the country. So every state has its different MSME schemes. So my question is, once you have become a startup, would you still be taking the benefit of MSME? Yes. So and turnover limit for MSME is 500 crore. Earlier it used to be 250 crore, but now few years back the turnover limit has increased to 500. Now the question is, if your business turnover is only 1 crore rupees, definitely you could take the benefit of Startup India. And could you simultaneously take the benefit of MSME scheme also? The answer is yes. Till your turnover is up to 200 crore, you could take the benefit of different MSME schemes, either central government or state government or Startup India scheme or any other scheme. But once your turnover crosses 200 crore, for example, the entity turnover becomes 201 crore. In that case, you will lose all the benefit available to you under Startup India scheme, but you will still be taking the benefit of MSME scheme under the medium enterprise category. And once you cross the 500 crore turnover limit, then you will become a big enterprise and you will also lose the benefits available to you under the MSME scheme. So why I have brought this point? Because when we are dealing with a client, we should be aware about the different schemes present for the same client under different industry. And from where could we get the scheme is, so simply search on Google MSME schemes by the central government. You will get a booklet of the same. There are different kinds of booklet. Some booklets are having I think 50, 60 plus MSME schemes available to different types of industries. For example, for electronic industries, there are different schemes. For R&D, science and technology industry, there are different things. Biotechnology, different schemes. Agriculture industry, different things. I have some books also. So I have. You could also order online MSME scheme books. I am not sure about whether the ICI. Yeah, I have read it in this month journal of May 26 that ICI will launch the MSME scheme booklet also. You could take the MSME scheme booklet of ICI or any other private author from wherever you get. But what I am trying to say is, till now we have discussed only about Startup India scheme, but there is whole lot world bigger than that awaiting for you, depending upon the nature of industry you are in. You might be providing your client, for example, your client is simply providing an investment of 20 crore. Even if you are getting your client 25% subsidy on that, 2 crore, and the benefit you are providing will be getting to 50 lakh, and we could easily take fees in lakhs rupees in case we are providing subsidy of 50 lakhs from the clients. So the opportunity is huge in the Startup India and MSME scheme sector. Now, this is one part. When we are providing different government scheme benefit to the client, and now let us think a little bit different and move to the next part. How would we be a funding enabler for the client? How could we provide the fundings? Fundings should be. So basically, let us understand. So you might have heard about the angel investors, not angel taxation, angel investors this time. Next terminology, you must have heard about the venture capitalist. Venture capitalists. And one more terminology might have heard some personal equity. Personal equity. Okay. So my question is, what is the difference between angel investors, venture capital, and it is not personal equity, actually it is private equity. Yes, it's private equity. So it is not personal equity, private equity. So what is the difference between all three? So as you have already heard, there is one more thing also, seed fund. Seed fund, it is simply if you want to start a business, the initial few lakh rupees or few thousand rupees you take from your own saving, you take from your family, or you take from your friend in order to grow your business. That amount is seed fund amount. Okay. And once your business has been a little bit established, next level is angel investors. So generally, angel investors provide us funding between few lakh rupees. Few lakhs meaning 25 lakh to 1 to 2 crore rupees, etc. So whenever our investment, whenever we can say our business is 6 months old, 1 year old, and the business is too risky as of now, and we need money in order to make our business sustainable. So generally, the individual investor, the angel investor could be your friends also, who provide you a great amount of money, but they will be taking either in the form of debt or generally it in the form of equity, but they are becoming a partner in your organization. So these are the angel investors. And once your business has done something, your business has proven that the business model is making profit or has the potential to grow and create employment, then you need funds for expansion. And that type of fund for expansion is generally, for example, you have successfully run your business in one location and you now want to expand it to 10 locations. You need huge money. So earlier, by using 25 lakh or 30 lakh, you have incorporated a business in one location. Now you have figured out a method, but you need to burn some cash for initial 2 3 years. Now you need 5 crore rupees for expanding your business to 10 locations. Yes, that will be a better option rather than going for second location and then another waiting for 2 3 years and then getting a third or fourth location and then again waiting for 2 3 years to funds that you made. There is a better method available is we get the venture capitalist team and we take 5 crore rupees from them. So generally the ticket size from venture capital is 2 crore to approximately 100 crore. And once your business has become large enough and from 10 or 20 units you need to expand it throughout the India. From 10 units, you want to expand it to 500 cities or 200 cities in India possible. Now, at this stage, what the business has done is business has proved that yes, I am a profitable business. I am an easily expandable business. I have a potential for growth. Now, when there is a little bit of risk or there is more certainty that the business just needs expansion money and the risk is very high, there comes the private equity players. And generally, their investment may range into thousands of crores of rupees. Thousands of crores of rupees might be invested by the bank. So now let us understand the differences between these three one by one with the help of our PPT. Investor type. So under angel investing, individual investors are generally there. Either one person or 2% are investing, or angel networks are there. For example, as of now, I am taking this session from Kurukshetra, and there is a Chandigarh entrepreneurs. There is a Chandigarh angel group. So there are around 200 person in this group. So what happens is anyone has business idea, we just first of all prepare the pitch deck and post their pitch deck in the group. 200 people simultaneously take a look into it. And for example, out of those 200 people, 5% get interested in the investment. So we'll make a one-to-one meeting with those 5%. And if the business is able to convince the angel investor, they will get the funding. So what I'm saying is this is also a emerging area of investment. And till now, our country GDP is only 360 lakh crore. And within next 22 years, our GDP gonna become around 3,500 lakh crore. So if you are thinking there is existing so much competition is there are not new businesses, how could I get that? So I'm simply saying just take one step at a time. So first of all, you need to have with you some of the angel investor networks. You need to get into connect with the angel investor network, or you need to get into connect with some venture capital networks. And once you have grown your operations, you might also get to take the deals of the private equity also. So once we get the network and then a business which we think should be worthy of getting the investment, we should approach we should make the parties meet and get the investment, and we could charge a hefty amount from the deal. So generally the fees the CA charge could range between 3% to 8%. In case the investment amount is low, and it may go higher up to 5%, 7%, 8%. In case the investment amount is very high. For example, if the person is investing 2 crore, 5 crore rupees, then you may take 2% or 3% of the approximate fees. I am not saying, I'm generally telling you about the general range of the fees. Generally, you people take, generally CAs take while they are providing the consultancy or the guidance. As we know, we could not quote our fees in percentage, but it is the general range of the funding amount which we are getting as a professional fees. So individual investors are there, and then there are the institutional investment fund, there are the venture capital fund, and then there are large investment funds, that is the private equity. Stages of business, angel investment only invest is early stage business or ideas. Venture capitalist does not invest in early stage business. Angel investment might invest into a 1-year-old company or 6-month-old company, even a company which has started just 2 months back also. But a growth stage, venture capital want to have some of the backing, some of the numbers. You need, before approaching venture capital, you need to show the history of the company, that the company has done something. Company will be able to do something in future. The company business model is scalable. You need to prove them. That is more of a growth stage. And the private equity, when your company has become a good profitable company or established company, now you want to expand majorly, then there comes the private equity in the picture. Risk level in angel investment is very high. Whenever the angel investors, I was discussing this point with one of the angel investor friend I have. So he was simply saying that out of the 10 portfolio group of the companies which he has, 7 companies lose their money. And remaining out of the 3 companies, 2 companies almost double or triple his money. And the one company, which could be the star of the company, generally provided them the return of 25x, 30x, or 50x. So generally, they are taking a very high risk level, and their entire investment might be gone. But even if only one company out of the 10 company grow, they will be getting their money back based on that. So the risk level in angel investing is very high. Under venture capital, the business has proved, but now earlier they have proven into one location or the one small geography. Now they want to expand the business. And for venture capital, risk level is not high as compared to the angel investing, but still they are also taking very much risk. Under private equity, there is a very moderate business risk, because the business model is very much has proven itself in not in one location, under different locations. If only if the exceptional situations like the war currently happening, where the government has told, PM Modi ji has said that avoid foreign travel, etc., or jewelry businesses. Now the jewelry businesses and the travel businesses, foreign travel businesses have taken a hit. So until all these circumstances arise, there is generally moderate level of risk. Investment size, very low, very less, 25 lakh to 2 crore. Small. Medium to large, under venture capital, 2 crore to 90 crore, 100 crore. And very large, under private equity, 100 crore to thousands of crore under private equity. Focus, potential and the founders. So angel investors are generally focusing on what is the potential of the business, what is the history of the founders, is founder worthy, etc., etc. Venture capital are more focused on the scalability and the growth, and private equity are more focused on the profitability and expansion. Due diligence, angel investors may do some basic to moderate due diligence. Venture capitalist will do the detailed. And when you are getting to private equity, they will do the very extensive due diligence. Ownership expectation, angel investing will take a minority stake, or venture capital will take somewhere in between stake, and private equity want the controlling stake. Private equity want approximately 50% or more than 50% also in some cases, and this might be the equity structure. Involvement, so it is a mentorship oriented involvement by the angel investors. And when we are discussing about the venture capital, So there is will be strategic involvement, and under private equity, there will be strong operation and financial control. Examples are, let us say, the toll collection. Under toll collection, the government build, operate, transfer model, government operates, and there are some private equity players who provide funding to the businesses who create toll. In toll, there is a foreseeable future earning potential. So they have a very strong operational financial home. They made their projections earlier that this much will be the toll we will be collecting. This is our initial investment. This will be the total funding requirement, the loan we will be taking. So they make their projections, and based on their estimation, they can take an educated guess and do the business. Return expectation very high. Angel investor, as I have told you earlier, so they generally assume that the 7 to 8 business might get the bankrupt, and it is one company which gonna get them 25x, 30x multiples returns. Under venture capital, they also expect high return in range of 30%, 40% CAGR return. But under private equity player, they are generally okay with even 12%, 15% IRR of the project or so, because they are getting the stable and large. Exit timeline, angel investors might take a longer period, and venture capital might take medium period, and the private equity players would like to exit. This is also longer, but between approximately 5 years or 7 years or so. So this was the all we have discussed about startup. Till now, we have discussed the how could we apply for DPIT recognition, who could apply for DPIT recognition, the Startup India benefits, and there are different MSME schemes are there. If we start discussing on one single MSME scheme, it would take at least, I think, 30 minutes or so, 40. And there are numerous of MSME scheme, approximately 50, 60 MSME scheme of only central government, I am saying. And when we discuss about the state government, there might be similar number of, for example, 40, 50 MSME scheme for state government, different depending upon the state in which you are currently doing your business or practice. So there are different types of schemes. And then last, just now, we have discussed about the funding round. So what I am saying is there is opportunity in each of the segment we have discussed. There is opportunity in Startup India, DPIT recognition. There is opportunity in income tax exemption. There is opportunity in MSME schemes, getting the client different benefits under subsidy schemes or interest subvention schemes or any other scheme also. And there is opportunity in getting the client the funding they want from the private players as well. So India is changing, our practice is changing, and anyone who will resist change will suffer a lot. So I would simply say we need to be able to update our thinking in such a manner that we will be able to grow rapidly. So any questions? So I think definitely you might be having some questions, but
Yes, sir.
before
We
I
have a
take your
few
questions, I have some questions of my own. Sir, just give me few more minutes. So I have prepared some frequently asked question journal queries so that we could figure out all those questions. First query is, in case any company is holding company or subsidiary company, then are they eligible for Startup India scheme? So what do you guys think? Actually, its answer is no. In case any company has holding or subsidiary, the government is assuming that you have become large enough, then only you will be able to, you will thinking about creating your holding company or a subsidiary company. The government is simply saying, we are not giving you Startup India benefit. A business starting from June 24 and then converted into company in March 25. From when the 10-year date should be counted, we have already taken this type of example when we were discussing about it. So from when the 10-year date should be counting from June 24 or March 25. So answer is date of incorporation of first entity, that is June 20. Next question is, ABC Private Limited apply for 80 IAC exemption scheme and then got rejected by DPIT. DPIT does not get their idea. Whether they could reapply, if yes, when? The correct answer is yes, they could reapply after 3 months from the date of rejection. DEF Private Limited have gotten their certificate of eligibility. Now, what are the steps they need in order to claim exemption under the income tax? So, we have already told you that Form 10 CCB need to be filed before getting the income tax exemption, before filing the income tax return of the company. Now, the last and the most important question is, will MAT will also get exempt once we take 80IAC exemption? So there is clarification from the DBIT department as well that the MAT will not get exempted. Earlier it was a matter of litigation or were having lot of queries, but now it is very much clear that you will be paying zero tax on your normal profit, but you will still be required to pay the MAT. Obviously, the MAT credit will be getting adjusted in the upcoming years. So MAT will not get exempted only by the virtue of the 80IAC exemption. So MAT still need to be paid. But yes, we will be getting the MAT credit benefit and we will be able to set it off with the later years. So before closing our session, now I think this is the right time to take our questions. So any queries, I would be happy
Thank you, sir, for the detailed presentation. We have received some of the questions. Shall I start reading the question?
Just give me a minute.
Yes. First one is, can existing company, say registered in 2007-8, can apply for DPIIT registration if all other conditions are satisfied?
So a very interesting question, but actually the point is, let me just give. So the point is, we know that the company will be getting the DPIIT benefit only up to 10 years from the date of incorporation. So if a company has been incorporated in 2007 or 2008, their 10 years has already been gone by 2017 or 2018. So as of now, it is 2026. So their 10 limit has already passed. So they are ineligible for applying for Startup India. But they are, in case they are a deep research organization, in that case also I would say, as the scheme was launched on 1st April 2016, deep research company incorporated after 1st April 2016 will be able to apply for the benefit. So in case you are getting any company before 1st April 16, state no. Only in case of deep research, there is limit of 20 years, but that will be counting from 1st April 16 on.
Second, I think we have covered from converted to LLP, when will 10 years start from? Whether
Yes,
from
already.
Yes.
Date of incorporation of first entity.
Yes, sir. Now I'm taking the third question. What about a company who get taxation at the rate 15% as per section 115 BAB under income tax?
So what is going to happen is,
Yes.
there are two options available with you. Even if you are getting tax at the rate of 15% under 115, under whichever section, if you get the benefit of 80IAC, your normal profit will, your normal tax on profit for 3 consecutive financial year only will become 0. And you still need to pay the MAT. So there are basically 2 points in this question. There are basically 2 queries. One query is, if we are getting reduced rate of tax, still, whether our income tax will still become 0? The answer is yes. Your income tax will still become 0. Another query which is similar to this query is, for example, you are getting 100% exemption for 5 years from any other government scheme or any other income tax exemption. So whether, so now question is whether we should apply for that scheme or this scheme. So in case you have taken that scheme, then you will not be able to take this scheme. You could only take the 100% exemption benefit from one scheme. So I think we have covered both aspects.
Yes, sir. Moving towards next question. What is the fund of funds for startups, FFS, under Startup India?
Very well asked question. So we haven't discussed it till now. So actually what has happened is, the government, there are look, we have different method of taking the funding. One method is we could take from bank. Another method is Startup India Seed Fund Scheme. Next method is the private funding we could take. And one more method the government has created, a fund of fund, whereby the government has initially proposed on the budget is 10,000 crore rupees they will provide, and they are providing each year few thousand crore rupees into that fund. So that fund of fund is created by the government to be distributed under different organization, which is currently managed by the SIDBI. So this is one more option of fund. If your business is startup recognized, you could also, as we have discussed about the Startup India Seed Fund scheme, there is only a limit of 20 lakh or 50 lakh in that case. But under fund of fund, SIDBI, you could also take the funding of 1 crore rupees or 2 crore rupees, depending upon the case maybe. So in case you have any eligible organization which you think is suitable for the funding, you may apply for fund of fund via any SIDBI branch nearby your location.
Yes, sir. Now I think we have covered this. Who is eligible to registered under Startup India scheme? This was covered.
Already covered.
How does the Startup India contribute to employment generation and economic growth?
Okay, so I think we have a very good question actually. What I have skipped a slide in between of the number of registration. Let me go back to my PPT. Just give me a minute. Actually, let me open my PPT again. Just give me a second. So that will give you a better picture. So basically, is my screen visible?
Yes, sir. Yes.
Oh. So basically, this is the current year-wise increase in the number of startups. So when the scheme was launched on 1st April 2016, so government has proposed this scheme in 2014 budget. When the first budget of the BJP government was there in 2014, they have showed intent of making India policy, Startup India policy. But as we know, it takes some time to get the intent converted into ground reality. So it takes approximately 2 years time. And when the government started this scheme from 1st April 2016, for initial year, there were somewhere around 400, 500 registration in the first year only. And then the number of registered startup grows to second year grows to approximately 2,000. And then 2018, approximately 5,000. 2019, 9,000. 2020, 14,000. 2021, approximately 20,000. 2022, 29, 40,000, 50,000. This year also, 25 also, it is estimated approximately 56,000 last year, 2025. 50,000 new startup has been enrolled under the Startup India scheme. So as of now, as I was looking through the portal yesterday, and if the times allow, we will take a walkthrough of the Startup India portal, whereby I will be providing you an insight of how to get the different types of client or how to get a gist of the Startup India. So basically, what is happening is, so whenever as the scheme has launched, as of now, 216,000 startups are there in India. So if we take at least not 50, if we take a minimum bare average of 10 employees in a business, some businesses might having 2 employees and some businesses might be having 50 employees. Let us take a bare minimum average of 10 employees in a business. So approximately employment generation will be 216,000 into 10 is approximately 22 lakh or 21 lakh 60,000. So this is the level of if we look at 22 lakh to our population 140 crore, our working population 47 crore, or every year plus 2 graduate 2 crore, we might say that it is very less. Yes, what I am also saying that till now our GDP is only 360 lakh crore. But in the years to come, if we see 2047, definitely the number of startups gonna increase from 216,000 to somewhere around 15 lakh or 20 lakh. So I am saying that baby steps have been taken in the last 5 years or so, or last 10 years or so. Businesses are getting used to it. Colleges are also teaching their children about how to start a business, how to get the funding, how to get the support. It's okay to fail, etc., how to try and error. So some baby steps have been taken, but yes, there has been some employment generation by the virtue of this scheme.
Yes, sir. Now, next question is, which will be the disbursal agency for SISFS for grant?
For SIFS, Startup India Seed Fund Scheme, as we have discussed the incubators, so disbursement agency will be that incubator, as we have already seen in that PPT. So let me again share the PPT. So as we have already seen that the DPIIT government, DPIIT under MCA, and thereby expert advisory committee. And what happened here is expert advisory committee provide approximately 2 crore rupees to the incubators, different incubators, for further disbursal into startup. So we are getting money from incubators only. So we will be getting money from incubator itself. From where the incubator is getting money, it is getting from the expert advisory committee. It is constituted under the DPIIT recognition, DPIIT department.
Okay, sir. Next question is, sir, how much could be expected interest or return percentage by the angel investors?
Could you repeat the question?
How much could be the expected interest or return percentage by the angel investors?
So generally what is happening is 90-95% of the investment is via equity route.
Oh.
So 90-95% of the angel investor want to get a equity in the company, because out of the 10 companies, even if 7 or 8 companies fail, even if one company gets successful, who provide them 25 or 30x return. So they want to take a bet on number of entity and create their portfolio based on their risk assessment. And even if some person might use debt portion, general debt rate of interest is 12% or so, or 1% per month. But there are very few transactions happening in debt. So more persons are interested in equity, taking the equity of the company.
Yes,
So
sir,
I think-
definitely. Debt is not that much rewarding.
And in case if you are talking about the fees we could charge as a professional, so I would simply say, for example, a deal of 18 lakh, 90 lakh, we would easily ask the client about 3-4 lakh rupees fees, depending upon your negotiation and the work you are doing and the profile, etc. And as our size of the investment grows, our relative percentage might be a bit of less, but our absolute money might increase.
Awesome. Next is how angel investors network can be approached for funding.
So simply, sir, let me tell you about 3-4 different methods of approaching angel investor. Very good question. So first of all, search on internet angel investor networks available. For example, you are dealing in Delhi, angel investor network available in Delhi NCR. If you are in Pune, angel investor network available in Pune. If you want to take the throughout the Maharashtra angel investor network, search the Maharashtra angel investor network. So I would say take the angel investor network within 200 to 300 kilometer radius of your location, and simply when you search on the internet, you will get the instruction how to join that group. So once you join that WhatsApp group, generally what is happening is angel investors they have a monthly meeting or so. So you will get the detail of the monthly meeting from there and start joining their meeting, and thereby you could be getting a range of angel investors. This is the one method. Second method is there are an alternative investment funds. There are approximately, I think, 300 to 400 alternative investment funds. So these are generally venture capital funds. which provide, which they have the total capital of 5 crore to 10 crore rupees, and they distribute it to different investors or different businesses. So you could also search on internet alternative investment fund and give them a call and place a meeting with them, or you could also search any your known angel investors on your LinkedIn area or on your LinkedIn profile. So we need to do is we need to meet new people, we need to call them, we need to ask them for a meeting, one-to-one meeting, and present our profile that we are having a network of startup, we are a CA. As a CA, this is our biggest advantage is we are welcome everywhere. Whenever we are approaching someone and businessman, we are saying we will get you funding. He say very good, sir, please provide us. And whenever we are reaching investors, we say we will provide you startups. They said very good, sir, please provide a startup. So it is very easy for us to get familiar with anyone. So the number one method is search on different networks. Number two is LinkedIn or your angel investors list. Number three is your mobile phone. So basically, we generally have 2,000 to 3,000 mobile numbers in our total contact list. So out of the total contact list, if you start looking at it one after another, I am 100% sure at least 1% of the person might be having that capacity who want to invest in some businesses or might also be investing in there. So you just need to make a list of 10, 20 or 30% who are having a huge pockets, who are earning in crores of rupees, who are having wealth of hundreds of crore or 50 crore rupees, and who are willing to invest 25 lakh, 50 lakh in some businesses. So through our make a list, call them and get to them meet one by one. Definitely, you within a period of 6 months or so, you will be creating your own funding network.
Okay, sir. Sir, next question is related to trader. You have mentioned that trader on its own cannot be said to be doing some innovative thing, but when it is clubbed with certain service, certain kind of service, it may make them in the criteria fall in the criteria of innovation. So, sir, can it be said that innovation can be area based? Means what an innovation is for a village cannot be an innovation for metro cities or something like that.
So basically, number one point is innovation could be subjective. And we could say that innovation is entirely new. And even if we are not able to find any innovative thing in our business model, there must be some improvement in existing product, service, or processes. So whenever any client come to us, so we need to figure out whether we could jot down 2-3 improvement areas from the traditional business which used to happen few years back. If we are able to jot down those things, we could apply for Startup India. I am simply saying you will be getting Startup India benefit for trader as well. It is very easy to get DPIT recognition. But when you will apply for income tax exemption, then they will look at it into much more deeper lens, the innovation. So we need to figure out 2-3 points while we will be filling the application, which we could use for applying for income tax exemption. And one more suggestion will be, so let me give a walkthrough, if the time allow. How many more questions are there?
1 or 2, sir.
Okay. So let me take it a walkthrough of the Startup India portal. So is my screen visible?
Yes.
Okay. So this is Startup India portal. So what I am saying is we go to network, we go to startup. So what is the best method of assessing whether innovation is there or not, whether our type of business is, as of now, there are 2,17,586 businesses having DPIT recognition. For example, Amey, you tell me one industry, any one industry.
Service or goods?
Any industry.
Any industry. So providing delivery services of medicine or some other goods.
Okay, medical industry, pharma industry, let us take. Okay, let me search. Actually, the scroll down is not working. So let us
We can
take
search it. Yes, sir.
ad-
Advertising. Yes.
let us take advertising itself.
Mhm.
So there are 1081 businesses on the advertising industry, and when we come to the sector, there are different sectors of advertising. Let us take online classified.
Mhm.
Under online classified, 159 companies are already there. So this is DPIT recognized. Let us now get the filter of 80 IAC. So there are three business who are dealing in advertising online classified and who have get themselves registered into 80 IAC and they are taking income tax exemption benefit. So what I'm trying to say is you could take whether the competitor or the similar company, any similar company of your client is already being registered on DPIT. If you are asking me about DPIT, 100% companies will be getting registered on DPIT. But we need to check on 80 IAC. If any of these company, any of the similar companies getting registered on 80 IAC, we could similarly, we could simply search the business model, search about the company. Most of the company have their website. We could understand what is their business model. We could take some suggestion from their website and try to inculcate those suggestions in our filing, in our form. So I think in most of the cases you will get an idea how the competitors might have filled their form, what are the innovation they are using. So based on this, we need to fill our form. So yes, this is a very subjective term, innovation, but I think in simple one trading shop there is no innovation. But if you are having a model and you think there is could be innovation, you could give it a try.
Okay, sir. Next one is why is the role of CAs becoming increasingly important in the startup ecosystem of India?
So actually, I think it is a good opportunity. So we should be happy for the opportunity. Actually, I would say that basically I take some orientation and MCS session, and I used to tell CA students that actually whenever a CA is even breathing now, CA is thinking about the development of the country. For example, we are filing a ITR. So two person are getting benefit. Government is getting their tax, and the person who is filing their ITR, we are also providing them some of the suggestion at how to save your money, how to invest your money. Now let us discuss about GST registration. Whenever any GST registration is getting done, the business, a new business is opening up, one or two employment generation is there. Now let us discuss about a few investment. For example, 1 to 2 crore investment project is there. Whenever we are helping any business to get the investment project, so 4 or 5 people or 5 to 10 people are getting employment. And I think it is the role of the CA to think about the growth of the nation, because CA generally grow on a growing. So it is our work to make the country prosper. So I think it is a better alternative for us. So there are different kinds of option, whether we can say startup, whether we can say sustainable development, valuation, climate funding, or many other Indian accounting standard or any other opportunities. So I think slowly but surely our compliance burden is getting reduced. The government is simply saying we are already having so many cases where there is tax embezzlement of 50 crore rupees, 100 crore rupees. What will we get if we start looking at 15 lakh, 20 lakh cases? Let us focus on those 50 crore or 100 crore cases rather than focusing on small cases. And so I think it is a good thing.
Yes, sir. Last one is what is the importance of financial planning for startups?
So I would also say it is a very generic question. So the better you plan, the better you prepare, the better you will be able to execute. So financial planning basically takes 2-3 aspects. Number one is from where will you get the initial investment requirement. For example, you are running a manufacturing business, service business, or any other business. In service or trading, you might say there is an initial requirement of few lakh rupees, but under manufacturing, there is a huge investment requirement. Number one is how would you figure out the initial funds. Next is how your business model work, how your unit economics, I would say. What will be your per unit price? How is your costing, your direct cost, indirect cost, your capital expenditure is how much, and whether you what will next is what will be your capital structure. For example, there is requirement of 3 crore rupees. Whether you will be putting all 3 crore rupees from your own pocket or you whether you will be taking loan, depending upon I would say your risk profile and the future projection, the riskiness of the project, and your past experiences also. So some people might want to avoid that completely and might think equity might be the best option. And some people might think that my business is having 80% probability or my business is damn sure to succeed. So let me take a debt instead of diluting my equity. So this is a personal choice. But yes, we should be aware about ourselves, aware about the risk we are taking, and based on that, the more we prepare, the better will be the execution, I would say.
Yes, sir. So with this, we have covered all the questions. I think most of the questions were covered during your presentation only. So we are closing this. So thank you, sir, for this wonderful session, and you have answered every question in detail. Looking forward for a more session with you. Thank you, Chairman, sir. Thank you, the committee. Thanks to all the wonderful and engaging audience. Thank you so much.
Thank you very much for having me.
Thank you, sir. Thank you for wonderful session, sir. Thank you so much. Thank you, sir. Thank you for coordinating the session. Thank you, tech support team.